Have you ever wondered where the financial market is headed amidst inflation, soaring debt, and housing market shifts?
In this compilation, we bring you insights from titans like George Gammon and Stephan.
Instead of sifting through hours of content, we've distilled their analyses into AI-powered summaries that save you time and deliver actionable takeaways.
So, buckle up. Let's dive into what these experts have to say about the future of our economy.
Today, we delve into George Gammon's warnings about a financial threat arising from soaring debt levels.
He elucidates how these debts could lead to severe market instability.
Gammon discusses how unprecedented global debt levels indicate a looming crisis.
He stresses the need for investors to prepare for drastic market fluctuations. Gammon points out that increasing debt could inhibit future economic growth and create costly investment conditions.
George advises investors to reconsider their approaches in light of current market dynamics.
He highlights the importance of identifying inflation hedging investments, especially during downturns.
Gammon foresees a possible market correction driven by higher borrowing costs.
He anticipates that governmental actions will favor tighter financial policies to address debt issues.
In conclusion, Gammon stresses the necessity of reviewing portfolios to pinpoint risks associated with rising debt.
Staying educated about economic policies and market movements is vital for asset protection.
Today, we're analyzing the housing market with insights from Stephan.
Graham's discussion highlights important trends that shape buyer and seller behavior.
Graham points out that rising interest rates are reducing buyer interest.
He mentions that various economic factors are influencing housing availability and prices. Graham emphasizes that higher interest rates deter buyers from entering the market.
Has financing become less appealing as a result?
Definitely. Many potential buyers are now stepping back due to increased financing costs.
Graham highlights delays in construction as a significant cause of supply shortages.
With limited inventory, prices are expected to continue rising.
Graham mentions that younger generations are becoming key players in the housing market.
Their preferences for urban living and modern amenities are significantly influencing demand.
What does Graham predict about the future of the housing market?
Graham believes that with increased inventory, housing prices could stabilize, which may lead to conditions more favorable for buyers.
Graham advises to keep an eye on interest rates and how they affect new home financing.
He also stresses the need to stay informed about demographic trends that impact the market.
Today, we're breaking down the insights from Emily Brown regarding the recent PCE inflation data and its implications for the markets.
Emily emphasizes that how markets react to inflation figures could signal greater volatility ahead.
Emily Brown believes that the market's reaction to the latest PCE inflation data holds significant information.
David Lynn agrees, noting this could lead to unpredictable market movements in the near future. Emily highlights that rising inflation is making investors cautious, impacting their trading decisions.
This behavior aligns with historical trends where inflation indicators lead to market hesitance. What does Emily predict for the market's near future in the wake of this data?
Emily anticipates increased volatility, particularly in sectors sensitive to inflation changes.
Emily predicts a period of volatility influenced by ongoing inflation concerns.
She points out that sectors heavily reliant on consumer spending may particularly be at risk.
In light of Emily's analysis, it's clear that investors should brace for potential market shifts.
David Lynn recommends keeping an eye on inflation indicators to navigate investment decisions effectively.
Both experts emphasize the importance of strategic adjustments in investment portfolios during these unpredictable times. Today, we're examining the fallout from significant layoffs in the labor market, drawing on insights from industry experts.
The analysts emphasize how these layoffs are reshaping the workforce and what it means for the economy moving forward.
Experts argue that existing labor market policies are failing to address the rapid rise in unemployment.
They stress the importance of implementing more effective policies to support displaced workers. The expert notes that recent layoffs are unprecedented in their scale, affecting various sectors.
This disruption poses significant challenges for the economy as a whole. It's interesting to see that layoffs are not uniform. Some regions are experiencing far more job losses than others.
Experts believe this will lead to uneven recovery across the country. The discussion points out the need offer comprehensive retraining programs to help displaced workers transition into new roles.
Job fairs also play a crucial role in connecting unemployed individuals to new opportunities. What do analysts predict for the labor market moving forward?
One prediction is that recovery may take longer than expected if appropriate policies are not put in place promptly.
Additionally, some workforce changes may become a long-term feature of the job market. In conclusion, the current mass layoffs reveal the critical need for collaboration between policymakers and the private sector to navigate this challenging time.
Experts agree that communities must be proactive in adapting to the new realities of work and employment.
It's clear that how we respond now can significantly shape the future of the labor market. Today, we're discussing Warren Buffett's strategic investments in real estate, as analyzed by Reventure Consulting.
Buffett's investments reflect confidence in the housing market, which has led to an upswing in builder stocks.
Warren Buffett's latest moves suggest renewed confidence in the housing market amidst current economic conditions.
Experts agree this investment aligns with a growing trend of increased builder stock values, indicating optimism among builders.
How have builder stocks changed following Buffett's investments?
The response has been positive, with analysts linking the rise in builder stocks to Buffett's strategic focus on real estate. Investor sentiment is optimistic, with many keen to follow Buffett's trail.
Historically, Buffett's investment choices have often catalyzed wider market developments. What projections can we make for the future of the real estate market based on Buffett's actions?
Analysts foresee a continual rise in builder stocks, highlighting that Buffett's investment decisions could stabilize the housing market over time.
In summary, Buffett's investment opens up significant opportunities within the real estate market.
Investors are advised to watch builder stocks closely as they may play a pivotal role in future financial markets.
Today, we are delving into the bond market analysis presented by Dr. Emily Brown in her discussion with David Lin.
Dr. Brown discusses the influence of rising interest rates on market dynamics.
Dr. Brown discusses that increased interest rates usually result in lower bond prices, creating market volatility.
Moreover, David Lin suggests that investors may need to rethink their strategies.
How does Dr. Brown address the impact of rising rates on bond investors?
Dr. Brown explains that as rates increase, bond prices tend to decline, leading investors to reassess their investments.
What strategies does Dr. Brown suggest for investors?
Dr. Brown points out that shifting towards shorter duration bonds could be a prudent move.
What foresight does Dr. Brown have for the bond market?
Dr. Brown anticipates that should interest rates keep climbing, prolonged volatility in the bond market could follow.
Dr. Brown advises investors to monitor interest rate movements closely.
Additionally, she underlines the necessity of diversifying investments to reduce risk during turbulent market conditions.
Wow, that was a deep dive into some complex financial waters.
It really was. Each expert brought a unique take on the economic landscape.
Let's recap. Dr. Emily Brown's perspective on rising interest rates resonates throughout.
Yes, and Warren Buffett's move into real estate raises eyebrows and questions in the market.
And who could forget the expert analyst discussing mass layoffs? A sobering reminder of the market's fragility.
Totally. Stephan highlighted housing market volatility, showing how interest rates can shift the whole game.
Then there's George Gammon, who fearlessly unveiled the dire state of debt levels. Quite alarming.
Indeed. It's fascinating how some agreements like the importance of interest rates highlight common ground.
But the disagreements, such as the potential of real estate investments, showcase the complexity in our discussions.
Absolutely. The insights we've gained today are invaluable for navigating future financial strategies.
If you've enjoyed this discussion and want more expert insights, please like and subscribe.
Your support means we can continue delivering fresh, informative content directly to you.
And don't miss our next video, where we'll explore emerging trends in global trade.
Thanks for tuning in, and as always, keep your financial knowledge growing.